Hiya. So I wanted to give a quick update because the world has changed. So I need to adjust the portfolio over the next while and I will be trading a little differently. I did want to quickly talk about the retail bros. So you may have heard about Dave Portnoy and his merry gang. They are moving the market, and it is incredibly tempting to jump in with them. They effectively are a group of people that are treating the stock market like a casino. There are lots of people that are bored, don't have jobs, have a little bit of extra cash, and are looking for some fun. And they've seen people like this group make incredible returns in a very short amount of time. So they have done incredibly well. They are beating the market, they are beating the pros, and this creates quite a compelling message, an attractive message for people that don't have the experience. Some of them will do very well. I'm hoping that they'll get out of the market before they get burnt. But the way that this usually goes, and it has happened before, albeit slightly differently, is that they will lose their shirts. So read up on them, laugh at the stories, feel a little bit jealous at the returns that they're making, but try to keep things under control. So part of what I want to talk about today, I'm going to try to do this quickly, is that the market is hot. So we had an all-time high, the market slipped, as we all know, the recovery has been insane. There are some companies, so here we can see 4 companies in the S&P 500 have hit 52-week highs, which I guess will be all-time highs. Netflix is probably one of those, and it deserves that valuation. It is actually making more money than ever before. The thing that is making people nervous is that there are a lot of companies that don't deserve their valuations because they are still in recovery mode and will be in recovery mode for a long, long time yet. Now, the PE of the S&P 500 is at 20. It is a little high. If you look at the mean and median historically, it's not massively much higher than it has been at certain points. So it's feeling expensive, particularly because of where we are in the world. But also, I wouldn't pay a lot of attention to the PE right now. There are companies that are going to report their earnings for Q3 relatively soon, and this number is going to look a lot crazier. So if you'd spoken to me, let's say 1.5, 2 weeks ago, I would have, well, and I have been saying, everyone, be careful, build up your cash positions, start your hedges. There's something big coming, and it wasn't this move that we saw just here. It needs to be something much bigger to have the stock market reflect the underlying economic reality. Now, I know the economy and the stock market are not the same thing, but they are highly correlated. The prices of stocks are a function of the amount of profit that they've been making. And a lot of companies have had a huge knock on the amount of profit that they're making. So the stock market is overheated, which happens from time to time. So up until a week and a half ago, I would have said, hold on, be careful, increase those hedges, hold more cash. You need to stop being careful. And then this started happening. The US has taken a stock market that was massively overheated, an economy that looks like it is recovering fairly well, and thrown a shitload more money at it. Massive amounts of money. They haven't ruled out more helicopter money, as an example. And on top of this, the president has said, I'm going to start a $1 trillion infrastructure program. So for those companies like Caterpillar that would have had a much slower, longer road to recovery, here's a little boost for you too. We're throwing money in all directions. Hell, why not? So there's a lot more liquidity in the market, and also it looks as though they're creating programs that will actually benefit companies in the long run and not just make stock prices go higher. On the other side of the pond in Europe, we're seeing more record spending by governments. Previously unheard of amounts are being pumped into the economy, and this is obviously going to support European growth too. It's not limited to the West. Japan is doing something similar, throwing $1 trillion of stimulus into their economy. And the story is similar around the world. Countries and regions across the world, they haven't stopped now that the stock market has, blown through previous tops. They're continuing to pump money into the economy. Now, I had thought that a triggering event for a sell-off would probably be the next quarter's earnings, because April and May have been horrific months. Those are the months where the majority of the Northern Hemisphere was closed for business. So earnings are going to be horrific. But instead of a sell-off preempting those earnings, because people know what's coming, they'll sell off before the earnings arrive, the poor earnings are announced. Instead, all of this lovely liquidity floating around is looking for a home. So that money is being pumped into the market. And instead of a sell-off event happening pre-earnings, I'm not sure it's going to happen now. It might happen at earnings. Maybe it happens just after earnings, but I'm not so sure, actually. There is a lot of money. There's a lot of FOMO, and the retail bros, all of this is coming together to not only prop the market up, but I think will probably drive the rally a bit further. This is bad because it feels like it's unsustainable and we're building a nice big bubble. But it could also be good, because the longer the market is propped up, the more funding is given to all of these companies to recover, and the more time is given for them, because time is another factor. No matter how much money we throw at them, they need to have some time to recover. But the time for them to meet the stock market recovery is extended. So overall, I guess if I was going to summarize it in a sentence, previously I was short-term bearish, medium-term unknown, long-term bullish. Right now I'm feeling short-term fairly bullish, medium-term still unknown, long-term bullish. So I will be adjusting the portfolio, probably removing a few of the hedges, keeping a good deal of cash on hand, but potentially climbing into a few stocks. All right, thank you. That's it.